Hi, I'm Dave Dinkel. This is your 2-minute tip special series. The question here is accounting and IRS problems. That's two topics. I want to take the accounting issue head on. You need to do accounting. It's very important, especially if you're doing rehabbing, to find out where you are. Are you losing money? Do you think you're making money? What's going on? It was so important to me as a rehabber when we were doing it that I actually set up my own accounting program from scratch. I had trouble learning accounting programs, frankly. And what I decided to do, instead of using a double entry bookkeeping system, is create my own single entry bookkeeping system on Excel. And what I did is I simply put together a spreadsheet that said, here's what I paid for it, here's what I expect to sell it for. The difference is my gross profit before I did anything to the property. Then every day or every other day, I'd take all the expenses I had, whether it was a credit card charge, cash, or whatever else, put it into that spreadsheet for that property, and it would give me a running profit and loss statement. Why did I do that? Why didn't I just use QuickBooks? The learning curve is too high. Why didn't I hire somebody? I don't know. I should have. But I didn't need to. So in this single entry bookkeeping system, what it gave me was ongoing profit and loss. And if I was doing 5 properties, I had 5 spreadsheets, all connected together to one main spreadsheet that gave me what appeared to be a day-to-day profit and loss statement for all of the houses, and it was. But I tied it into the entire system to calculate my daily net worth. So I could tell by what my expectation was on the profits on the houses and what I had as assets and returns on the assets to calculate a net worth figure. Why does it matter? Well, it may not matter at all, but it's a measure of how you're doing in life. You can say to me, money doesn't matter. You're right. It doesn't matter to a lot of people, but it's sure a good yardstick to figure out how successful you are. And many people are successful without money. And I acknowledge many people who have a lot of money are very unsuccessful in their own personal lives. So it's relative. For me, it was a yardstick. How am I doing? Just because I have a balance in my bank account doesn't mean I have a net worth. I could own much more than I had. If you're going to do your own accounting, the spreadsheets in my materials and stuff, but I suggest what you do is you're going to have to do accounting for the IRS. You should have somebody doing that for you. Now, I know plenty of investors who do their own tax returns, and my God, do they go through hell. The tax laws are always changing. Why should they have to keep up with what an accountant does on a regular basis? They have to do it just to keep up with all the changes. Don't hurt yourself. I always say this to Nan, what is your time worth? And I say that because here's what I do. On the spreadsheets that I use, remember I said to you, I calculate my net worth every time I make an entry? There's some other things I calculate every time I make an entry. My net income for the year, my net income for the hourly wage that I would get if I divide it by the number of hours in a week. What am I making per hour? And one time my grandson said, what do you make per minute? So I divided that hour into 60 minutes, and I know what I make per minute. The reason I did that is Nan loves to clip coupons. And we go to the store and she'll say, look, I saved $40. That's wonderful. But what did it take in time to clip $40 worth of coupons? We have a difference of opinion. Men and women have a different mindset. My mindset is you can make 10 times that amount without too much effort other than by doing something else. Why clip coupons? Because it's a mindset, and there's nothing wrong with that. But if you want to change what you're doing in your life, you have to make changes, some of which are painful in some way, shape, or form. I one time said that you have to make sacrifices to be successful. And a guy in the audience said to me, I'm not giving up my church, I'm not giving up my family, I'm not getting a divorce. And I said, did I say anything to you about church, divorce, or anything else? All you're doing is making excuses of what could happen if you did something that you don't want to do. You're afraid of failing. And he said, you're right, but I'm not going to give up my family. I said, go away, leave me alone. Yes, you only have so much time. We all have so much time. And I acknowledged that a long time ago. And what I did is I looked at my most successful students. I looked at myself and said, what do we do different? We all have the same amount of time. I tend to be one of the guys that does too many hours probably. But one of the things I did is I wrote a time management course that I included. And even my most successful students said to me, man, that really helped. Because some of the most successful students are mothers, full-time jobs, and children. So when do they have the time? We all have the same amount of time. You have to carve it out. What about the IRS? What about the IRS? I could be one of the last guys in America who actually every once in a while gets cash through a transaction, and I report it. Am I stupid or what? No. I have been blessed my entire life, and I think that we live in the greatest country in the world. Somebody has to support it, and a lot of people aren't. So if you don't feel that you're deserving of living here and deserving of paying for that, that's your choice. My choice is, when I do my tax returns, any amount of cash I get goes on. That simple. what do you do with the IRS? How do you handle it? Tell them the truth. You made a mistake. Acknowledge the mistake. If you lost money, acknowledge that you lost money. Don't tell them you lost money if you didn't. Don't falsify records or anything else. Now, are you going to get caught? Probably. I'm not going to tell you that you're not. It's only a matter of time in most cases. Everything we do as investors has what's called an audit trail, meaning there's a closing statement and there's things in the public record and things like that. So one of the gizmos that some investors use is they use land trusts to transfer the beneficial interest, or the amount of money they make does not show up. So their attitude is, it doesn't show up, why should I have to pay taxes? And the reason is jail time, heavy fines, and I hope the IRS catches you because you're doing something that you shouldn't be doing and you know it. And I had a student come to me, and I got to tell you this. One of my very successful students who's now becoming a national guru, or at least he's trying to be. And he said to me, I've had a terrible problem. And I said, you always have a terrible problem. What's this one? Typically what he meant is that he has a closing in some kind of highly complicated. He'd say to me, what do I do? I'd say, just this. So he said to me, I haven't paid my income taxes in 3 years. I said, what? And he said, I just got too busy. No, you don't get too busy, no matter how much money you're making, to forget to pay income taxes. So he said to me, what do I do? And I said, well, you have two choices. Cut your stomach open with a knife or go down to the IRS and say, guys, I lost my head and I want to make a deal. That's what he did. He didn't cut his stomach open. He went down to the IRS, and they made a deal. And one of the reasons he went down there is I said to him, listen, with fines and penalties, interest and so on and so forth, you could easily owe more than you earned before it's all over if you have to make a payment plan with them. And what he did is he didn't pay the taxes because he was putting it into one big property that he wound up making a lot of money on. The comment is don't let it happen to you. Now there's people that advertise on TV, if you owe more than $10,000 in taxes, come to us and we'll work it out for you. Don't set yourself up in the first place. One of my biggest issues with new students where they suddenly come into a lot of money. They start early in the year, mid-year, they do a deal, they do 2 deals, they're out 5 or 10 deals. They didn't keep any money aside for taxes. Why? There's nobody there asking for it. When you have a check, they suck it right out. But when you get a sale on a property and you get a check or a wire, there's no deductions for taxes. So plan ahead and do what's right with the IRS. It'll go a long way. I'll see you on the next 2-minute tip.